and welcome. This is All You Need to Know. I'm Agamaki. Let's start by taking a look at the global markets. At this point in time, we're seeing a lot of green, a lot of strength, not only in the American markets, which did close in the green by as much as 2%, at least as far as key indices go, such as the Dow, S&P 500 or the Nasdaq. That did have a good effect on Europe as well, which also advanced, at least the key indices advanced by around 1.5%. Asia is also opening in the green. At this point in time, we do have gains in the Nikkei, which is also up around 1.5%. And that has had an impact on the SGX Nifty, which advances by as much as 1%, well over 100 points at this point in time. But what did we see when it comes to trade yesterday? Well, we saw Nifty advance for the third straight day. The big cap and the small cap indices outperforming the major indices. The banking indices, for that matter, also doing very well, with the Nifty PSU banking index standing out, advancing by around 2.7%. Two other sectors which also did well was the auto and the IT sectoral index. But when it comes to some of the other variables, we did see Infosys advance by as much as 3% in the American markets. We did see steady earnings coming through, though there was a miss when it comes to its margins. We did see its profit come in line with expectations, and some gains for ICICI Bank, Dr. Reddy's and Tata Motors as well. Similarly for Wipro and HDFC Bank. When it comes to institutions, well, we did see FIIs pull out another 1,165 odd crores on a net basis. On the other hand, DIs plowing back another 1,051 crores on a net basis. But moving on, when it comes to the contributors, it was essentially Reliance Industries providing a third of the gains on the Nifty, advancing by as much as 72 points. ICICI Bank, HDFC and M&M, among many others. We did see some weakness bearing down from HDFC Bank, Enables Housing Finance and Infosys, which is expected to open in the green on the back of what we've seen in the ADRs. But when it comes to the futures and options space, let's take a look at the futures. Fresh longs coming in, considering a 4.5% increase in open interest for the Nifty banking index, short covering, considering we saw a decline of around 1.7%. And among other factors, we're watching out for how we see open interest distribution currently around 10,500 and 10,400 on the lower end. That's the put. On the higher end is the 11,000 call. A lot of activity was around the 10,500, 10,600 mark, as you can see here. More writing specifically around the 10,500 put. But the India VIX, of course, also came off quite substantially to around 17.4. And we're also looking at the put call ratio, which has up higher to around 1.24. That's the Nifty, and the Nifty banking put call ratio at around 1.19 against 1.2. Moving on, MCX India saw fresh longs coming in. We did see some fresh shorts building in Diwan Housing Finance, considering the stock took a tumble of around 4.5%. Among two other stocks that we do have, where Federal Bank advanced by around 7.5%, fresh longs there. And we also saw fresh longs in Chennai Petro, which advanced with the rest of the ONGC pack, or oil and gas pack for that matter. But on the whole, a lot of these stocks have been doing well, and we're expecting some strength to continue. But now let's go across to Bloomberg's Hedis Through for the top international headlines.
Reports from Brazil say the outgoing acting president, Michel Temer, has been charged with corruption. TV Globo says police have presented a formal indictment just days before the next presidential election. Temer has been in the role since 2016 but is not standing in this weekend's vote. The latest poll puts right-winger Jair Bolsonaro 18 points ahead of his leftist rival, Fernando Haddad. EU leaders meet for a crucial summit later on Wednesday, with Brussels demanding Theresa May offers concrete proposals for bridging the Brexit divide. Council President Donald Tusk says new facts are needed to revive talks that stalled over the weekend. May is expected to address the other 27 EU leaders before she leaves them to discuss the issue without the UK being in the room.
For a breakthrough to take place, besides goodwill, we need new facts. Tomorrow, I am going to ask Prime Minister May whether she has concrete proposals on how to break the impasse. Only such proposals can determine if a breakthrough is possible.
The president of the European Commission says there would be, quote, a violent reaction if Italy pushes ahead with its controversial spending plans. Jean-Claude Juncker spoke as the populist government in Rome confirmed a spending increase that'll push the deficit to 2.4% of GDP next year, breaking EU rules. Italy's national debt is the largest in the EU after that of Greece. Turkey says investigators have found evidence proving the killing of Saudi writer Jamal Khashoggi in the kingdom's consulate in Istanbul. Security forces also went to the residence of the Saudi consul after he left the country. President Trump says Crown Prince Mohammed assured him he knows nothing about his fate, yet he added, quote, it would be bad if the Prince or King Salman were involved. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Hadi Stroud-Watts. This is Bloomberg.
Well, what makes sense to me is the change. We fell in love as a community wrongly with this notion of a synchronized pickup in global growth. There was nothing synchronized about it. It was weakly correlated. Now we're realizing two things. One is growth is going to be lower, yes, but we're also realizing growth is going to be more divergent, and that complicates the outlook.
And you think that divergence can continue?
I do. I think the divergence continues for a while. I think investors need to make two major calls. One is, how long does this divergence continue? And two, ultimately, when we get the convergence, do we get it from below, meaning that the rest of the advanced world catches up to the US in terms of growth, or do we get it from above? The US is pulled down by gravity of the global economy. So these are two major calls that people need to think about distinctly.
Hero Motocorp's second quarter earnings were more or less in line with the street expectations. Now, if you look at the revenues, they came in at close to 9,100 crores. That was a growth of nearly 8.5%. Slightly better than the street expectations. However, if you look at the profits and EBITDA, they came in broadly in line with the street expectations. Profits stood at close to 976 crores and EBITDA stood at 1,378 crores, down by nearly 5%. Margins also, we were expecting it to be close to 15.4, 15.5%. They came in at 15.2% versus a level of 17.4% on a year-on-year basis. And this drop in EBITDA margins is largely to do with two factors. Number one is the higher commodity cost and raw material cost. In fact, in the quarter, the raw material cost or the raw material consumed as a percentage of overall sales stood at 70.4% versus a level of 67.3%. So almost a 3 percentage points jump in the raw material cost. Not only that, we had the phasing out of the Haridwar plant tax benefits because of the GST implementations, and because of that, on a year-on-year basis, the overall profitability has come down. However, if you look at the management commentary, it has been strong. They believe that despite the cost challenges, they are expecting the volume momentum to sustain moving forward, especially with the start of the festive season. And because of that and higher volumes, we could see the profitability improve for Hero Motocorp.
Stock of the day, Shakti Pumps on back of good set of numbers reported by the company. If you look at the top line growth, we're looking at more than 100% jump out there at a number of 139 crore as compared to nearly 68 crore. On bottom line front, it's a threefold jump there. The company has reported profits of more than 9 crore as compared to 3 crore that we saw in the corresponding quarter of the previous year. Operating performance too has been healthy for the company. A 90% jump there to a number of 21 crore as compared to nearly 11 crore that was registered in the corresponding quarter. Margins, however, remain flattish around that 16-15% kind of level that was noticed earlier. If you look at what goes behind the making of the number, besides the higher revenue cost optimization measures, it's also the tax outgo reduction that has led to the bottom line, a good bottom line show. Reduction in employee benefit expenses and other expenses mainly has led to cost optimization. Employee benefit expense has reduced to 9.5% as compared to 16.5% earlier. And also, if you look at the other expenses, that as a percent, your net sales has gone down to 16% from 19% noticed previously. Total expenses overall for the company on consolidated basis reduced substantially. And also, if you look at the tax expenses, that as a percent to PBT reduced to 28% as compared to nearly 39%. If you look at the breakup, the revenue breakup of the company, you would notice that we've registered, the India business has registered a more than 100% jump out out there. US business is at 42%. The Australian business, however, has seen a 13% downtick. If you look at the EBIT performance of this counter, Indian business again has registered a sharp uptick at more than 150% jump there. Now, notably, Indian business contributes to more than 82% of your EBIT performance. So clearly, the outperformance for this counter is coming in from the domestic business. USA business, however, has seen a downtick of 27%, and we've seen a 67% uptick by the Australian business, while China business has registered a growth of around 15 lakh for that matter.
Shifting focus to the commodity space, starting off with oil prices, we are seeing some bit of upward bias for the fourth consecutive day for WTI on the back of positive inventory data. So API has in fact reported an inventory decline of more than 2 million barrels for last week as far as the US crude oil inventories are concerned. But as far as the OPEC output is concerned, the Indian oil minister has gone on record and said that the OPEC output has not risen so far. That said, the metals index closed lower for the second straight day in a row on the back of US President Donald Trump hinting at more tariffs against China. As far as individual base metals are concerned, we had copper, which posted the biggest decline in more than a week on the back of inventory data. The LME copper inventory rose for the first time since September 21st, and we had the LME aluminium inventory also, which rose 7.6%, which is the most since Feb this year. Lastly, talking about precious metal space, gold prices have been on an upward trajectory in the last few days. However, currently trading soft after rising for 2 consecutive sessions.
Amongst the stocks that we were tracking in trade today is Mahindra CIE Auto, which reported a very strong set of numbers for the July to September quarter. The revenues grew by 22% and the net profit grew by a much stronger 73%. Even if you look at the operational performance, EBITDA growth came in at about 37% and margins saw an expansion by 140 basis points to 12.3%. Next on the list is CRISIL. While the revenue growth for the quarter was 4%, the net profit growth was much sharper at near 30%, and that is largely on account of other income component that came in during the quarter, because if you look at the operational performance, the EBITDA growth was muted at about 3% and margins also dipped slightly. Next on the list that we have is IIFL Holdings, which will be in focus. Now, the company's wealth management arm has acquired Chennai-based Wealth Advisors for 253 crores. Now, this is a wealth management and portfolio management company. The acquisition, they believe, will increase the company's client base and further expand the exposure in South India. Additionally, IIFL Holdings has also said that they are housing finance subsidiary has raised 1,000 crores via the refinancing window from National Housing Bank, and they've also raised $50 million from SBI through ECB, so that will help allay some liquidity and ALM concerns. So that's IIFL Holdings to track. Also, Lemon Tree Hotels, which has signed a license property for a 70-room property in Mumbai. The property will be operational by June 2019, so that's another stock to watch out for. And next on the list is Cochin Shipyard, where they will be buying back equity at 455 per share. That's about a 18% premium to Friday's closing price. The total buyback is about 200 crores. And lastly, we have Lakshmi Machine Works, which will consider buyback of equity shares on October 22nd. Federal Mogul is next on the list. Now, they will offer 25% capital, that is the acquirer, will offer 25% capital to public shareholders at 420 per share. There's more or less closer to the market price. So those are some of the stocks that you need to watch out for.
Well, it was a steady quarter for Infosys. The top line came slightly ahead of expectations. We did see about 4.2% growth in constant currency terms. Its margins remained flat at around 23.7%, and this is, of course, a quarter-on-quarter as well. Profits also rose by as much as 13.8% quarter-on-quarter at around 4,110 crores. Now, in terms of key takeaways, margins did remain flat, and according to the CFO, while there were benefits of as much much as 80 basis points on the back of currency and another 70 basis points benefit coming from better pricing. About 150 basis points were also lost on account of higher compensation as well as subcontractor charges. That said, when it comes to its guidance, the company has maintained its FY19 guidance for the top line at around 6 to 8% and its operating margins at around 22 to 24%. It did see key deal wins of large deal wins of about nearly $2 billion, and the company's CEO Salil Parekh does suggest that large deal wins is likely to remain lumpy through the course of the year. Key verticals, financial services did see about a 5.8% growth on a quarter-on-quarter basis, constant currency, and North America, its largest market, which contributes 60% to revenues, did see about 3.8% growth as well. But we also spoke to MD Ranganath, the company's CFO, who will be moving out soon, about the prospects of the company, and this is what he had to say. Listen.
If you look at last 18 years, we have seen multiple business cycles. We used to grow at 100% when I joined, 100% year on year. Then became 30%, then became under 10%. In the last 3 years, we have gone, and this year, again, we have had a good performance. If you look at fiscal 16, we grew more than the industry, right, at 13%. I think it's a business cycle, and at the same time, when the sectoral things are positive, I think we also have to execute well and move forward.
And what are the key challenges which awaits for Infosys? You have been facing attrition issue as well, and how much headroom do you have to Infosys has to counter growth issues or currency fluctuation?
I think currency is something we have to navigate and we have to manage. I'm very proud of the fact that in each of the 12 quarters of the last 3 years, we have had a very volatile currency environment. We had Brexit, we had US elections, and so many things. We were able to navigate that effortlessly, of course, through appropriate hedging strategies. I don't think, hedging per se is rather the currency volatility per se is a challenge. I think company has sufficient expertise in navigating that. And coming to attrition, of course, if it's not just us, several of our peers have had attrition. And attrition, of course, is one of the prime areas. As I said, that's one of the reasons why we invested this quarter to address some part of the attrition, especially in certain pockets. At the same time, compensations and the variable pay. And in a high demand environment, we do see attrition kind of spiking at certain intervals.
Well, Reliance Industries is expected to report a subdued quarter in the second quarter of financial year 2019. Now, if you see the headline numbers for the standalone business of Reliance Industries, the revenue is expected to be higher by around 8%, while the EBITDA is expected to be higher by only 2%. Now, this slower growth rate in EBITDA would lead to a 100 basis points contraction in the EBITDA margins of the company. Now, the net profit, that is expected to remain largely flat at close to 8,853 crore rupees. Now, this could also be the slowest net profit growth for the company in the last 15 quarters. Now, on the operational side, the company's gross refining margins are expected to decline to around $10 per barrel despite stable benchmark. Now, Singapore gross refining margin, that is the Asian benchmark, that averaged at around $6.1 per barrel as against $6 per barrel in the last quarter. Now, lower gross refining margins coupled with lower volumes will impact the refining business of the company. Now, gross refining margins and refining volumes are expected to remain weak due to the plant shutdown during the second quarter of financial year 2019. Now, for the petrochemical segment, that is expected to report yet another strong quarter on the back of rising volumes and product spreads. Now, volume growth is expected to rise on the back of ramping up of new capacities, while spread strength will be on the back of ethane imports that the company has been doing. Now, rupee weakness, that is expected to benefit the core energy business of the company, but will also result into higher interest costs for Reliance Industries in the second quarter of financial year 2019. Now, a couple of things to watch out for in the standalone business would include management commentary on the progress of the remaining core projects of the company, while any future capital expenditure plans that the company has planned. Now, for Reliance Jio, there is a telecom business of Reliance Industries. Now, that in that front, if you see, the revenue of the company is expected to be higher by around 12%, that is for Reliance Jio, and the EBITDA is expected to grow nearly 16%. Margins, now that will expand by more than 100 basis points to close to 40%, while the net profit is expected to be higher by around 21% for Reliance Jio. Now, average revenue revenue per user, that is expected to decline for the 4th consecutive quarter to close to 132 rupees in the second quarter of financial year 2019. Now, ARPUs are expected to decline because of the Jio phone users that are coming at lower plans, which would also lead to ARPU dilution for the company. Now, the revenue and net profit of the company is expected to rise on the back of strong subscriber additions seen by Reliance Jio in the September ended quarter. Now, increase in fuel prices could impact into higher network cost for Reliance Jio, while rupee depreciation could lead into higher finance costs for Reliance Jio. Lastly, key things to watch out for would include the progress on their broadband segment and the DTH business, the update on the Jio phone subscribers, trend in utilization rates for the postpaid plans, and any capital expenditure plans that the company has planned for the second half of financial year 2019 would be key things to watch out for in these earnings.
Let's now have a look at the top 3 stocks to watch based on yesterday's market action. The first stock on the list is Escorts, which was up about nearly 7% in trade yesterday and saw delivery buying of nearly 80 crores. The delivery volume more than doubled for itself when compared to its 5-day average, while the total volume surged about 83% as compared to its 5-day average. Second stock to watch out for, Federal Bank. Now, that was up about 7.5% as well and saw delivery buying of nearly 82 crores. The delivery volume surged about 93% as compared to its 5-day average, while the total volume surged about 3 times as compared to its 5-day average. Last and final stock, Axis Bank, which was up about 2% and saw delivery buying of nearly 400 crores. The delivery volume surged 60% as the total volume surged 20% when compared to its 5-day average.
Well, it's setting up to be quite the interesting day. All the indications are for a positive start for the equity markets. But let's take you through some of the stories that you'll find if you look on the website as of now. That's BloombergQuint.com. The government has raised the interest rate for General Provident Fund and other related schemes by 40 basis points to 8% for the October-December quarter. The rate is in line with that offered by the Public Provident Fund. And in international news, US Secretary of State Michael Pompeo arrived in Saudi Arabia this morning as the kingdom remains under pressure to explain the disappearance of writer Jamal Khashoggi after entering its embassy in Turkey. Media reports suggest that authorities in Riyadh are considering saying that the journalist died in an interrogation that went wrong. Earnings are going to be front and center, and you'll find all the details that you have to watch out for in trade today in just a short while in Indian Open, so do stay tuned. This is Bloomberg Quint.